Here's takeaways from the Macquarie conference. Marcus Bogdan joining us from Blackmore Capital. Marcus, very good morning to you. So interested to get your overall view there. Maybe we'll start with the banks because obviously we've just had NAB reporting today as well. We've had another couple of the biggies too. What's your take on certainly on the big four at the moment?
Well, you're absolutely seeing that recovery, an improvement in franchise performance, uplift in earnings, strong capital position, recovery in dividends. All of that is encouraging, and also stability on margin. So the banks are still in an upgrade cycle, and so I think that's generally going to be positive for bank share prices going forward.
And it's obviously all very much about dividends at the moment as well.
Absolutely, and we're seeing that recovery in dividends, dividend yields around 4 to 4.5%, fully franked, but most importantly, now more sustainable with payout ratios between 60 and 70%.
And Marcus, I know Amcor is another one that you are looking at. Q3 increased guidance to 14 to 15% EPS growth for FY21. Is it still one that you've got in your portfolio?
Yes, very, very much so, and that was a terrific result. Another upgrade from Amcor, and particularly where they're very much aligned with raw material price increases that we're seeing pressures across a range of different industries. They've been able to pass those costs through, and they've been able to actually deliver margin expansion through this period. And 14 to 15% constant EPS growth is a terrific performance from an industry leader.
Marcus, you've also taken a look at CSL, the biggie there. It's obviously had its issues through COVID, certainly as far as donor participation is concerned for its plasma collection. How are you looking at the company now?
Well, it's been an absolute laggard over the last 12 months. It was, about $340 pre-COVID. Today it's in the sort of the 270s, and what the market was really waiting to see is some sort of recovery in plasma collections, particularly in the US. And the most recent data on foot traffic is encouraging. You're starting to see centre reopenings, people returning back and delivering plasma, and also some price increases there. So I think this is a key catalyst for a re-rating in CSL, and this is the first evidence that we're seeing a recovery in the plasma business. We know that the vaccine business has been particularly strong, but if those two can work in unison, then I think you should start to see a good recovery in their share price.
And Marcus, let's stay in the healthcare space. Healius is another one that's reported.
Yes, and look, Healius and Sonic are pathology providers, and I think what is really interesting here is just the continuance of COVID testing, the PCR testing, and we expect that will continue, particularly through winter. And that's certainly underpinning the growth there in Healius. But then you're also starting to see a recovery in their base businesses in pathology and diagnostics. And also in their third business is short stay hospitals, a very strong recovery there. So this is an absolute turnaround. The balance sheet is strong. The multiples, the EBITDA multiples are around 6, with earnings per share growth of around 7% over the forecast period. Still looks at attractive levels.
To Medibank, interesting sector this, isn't it? Because obviously it's regarded as somewhat unsustainable because there's question marks, particularly over younger generations, whether they're taking out private health insurance. Yet it's managing to find some growth here as far as policyholders are concerned.
Yeah, and finally, after many years, you are starting to see some policyholder growth. They've upgraded their guidance there. They're growing above system. And I think more broadly, there is concern around public hospital waiting lists, and you are seeing a greater interest and a greater take-up in private health insurance. You're seeing higher retention levels, and so that's translated into the market leader upgrading their earnings. I think another interesting thing you're seeing with Medibank is they are expanding away from private health insurance to look at GPs, short stay hospitals, and at home care. So they're becoming more of a vertically integrated healthcare company. And if they can transition that successfully, then I think that they will be afforded sort of a higher price earnings multiple going forward.
And Marcus, what about Ramsay Health? It was a pretty disappointing read, slower than expected uplift, Victoria lagging. Is it one that you still want to hold?
Yes, I think we definitely want to hold because it is ultimately a COVID recovery play, not only in Australia, but also given their large exposure into the UK and Europe. But the pickup has been slower than expected. Surgical volumes and the recovery in elective surgery has been fine, but they're not seeing it in their broader hospitals, particularly in medical. And so until you get both of those things working together, you'll see a sort of a continued compression there in margins. But ultimately, I think both the surgical, the medical will recover. And then in the UK, they've entered into partnerships with the public system there, the NHS, for a two-year contract because they're very extensive waiting lists there in the public system. And then ultimately, Europe will recover as well. So I think this is one you need to be patient on, but ultimately I do see the recovery there in volumes.
Marcus, can we just clarify then, given those stocks we've just run through? So you've recently added Amcor and Medibank? Yes,
correct,
so you still
yes.
see those as a potential buy at this point?
Yes, no, I think both of those companies are illustrating improved momentum,
yep.
And their valuations are still fair, underpinned by strong balance sheets and attractive dividend yields of around 4%.
All right, you're also liking CSL and Healius at these levels?
Yeah, particularly CSL as a recovery play, and particularly because it's lagged the overall market for an extended period of time. And I think it's a high quality franchise, and I think you will start to see improvement in earnings in the next couple of years. And Healius is the recovery play, and I do think that pathology testing, COVID testing will be with us for the foreseeable future.
You're holding Ramsay, but would you be buying it at this point?
No, just to hold it at this
Yep.
at this stage, but ultimately we do think that they will recover their volumes.
And a quick one on the banks then. Anyone that you're looking to buy or at least add?
No, so we're already positioned in both Commonwealth Bank and Westpac. It was pleasing to see the improvement in Westpac's performance, quite an aggressive cost out program over the next 3 years. But I do think that the banks are in an upgrade cycle, and the dividend yields of 4 to 5% look attractive given where cash rates are.
Marcus, terrific. You've given us a lot to think about. Thanks for joining us from Blackmore.
Thank you very much. Cheers.